This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
European Union leaders have agreed an embargo on Russian crude oil imports that will take full effect by the end of the year, but Hungary and two other landlocked Central European states secured exemptions for the pipeline imports they rely on. The ban, agreed overnight after weeks of wrangling, aims to halt 90% of Russia's crude imports into the 27-nation bloc by year-end, officials said. It is the toughest sanction yet on Russia for its invasion of Ukraine, and one that will itself affect the EU, where energy prices have spiked and inflation is running at close to a double-digit clip.
Oil prices extended a bull run on Tuesday after the European Union agreed to a partial and phased ban on Russian oil and China decided to lift some COVID-19 restrictions and the US summer driving season kicked off. Brent crude for July, which expires on Tuesday, rose $1.58, or 1.3%, to $123.25 a barrel by 12:30 p.m. Eastern Time, 16:30 GMT, after earlier rising to $125.28, its highest since March 9. The more active August contract hit a high of $120.80. The premium of August loading Brent contracts over a 6-month spread hit a 9-week high at close to $15 a barrel, indicating current supply tightness.
Moving on to the top news in the energy sector.
Russian oil companies led by Rosneft plan to reopen wells in June which they had shut due to Western sanctions, 4 sources said, as firms bank on a pickup in seasonal demand and sustained Asian buying. It was not immediately clear how big the increase could be nor how it might be affected by EU plans announced on Monday to slash Russian crude imports by up to 90% by year-end. Between May 1 and 30, Russian oil production increased to 10.19 million barrels per day, BPD, from 10.05 million barrels of oil per day in April, the Interfax news agency reported.
Russian gas flows to Europe directly to Germany and via Ukraine fell on Tuesday morning, with Moscow escalating its cuts to European supply as it halted delivery to Dutch trader Gazprom. Requests for Russian natural gas flows to Germany through the Nord Stream 1 pipeline across the Baltic Sea fell to 65,146,776 kilowatt-hours per hour. Kilowatt-hour per hour, data from the pipeline operator showed. Physical flows to Germany through the pipeline stood at 67,341,225 kilowatt-hours per hour, down from more than 73 million kilowatt-hours per hour over the previous 24 hours. Next, we have the top news in metal markets. Gold prices fell nearly 1% on Tuesday and was headed for a second consecutive month of declines, pressured by a rise in the dollar, while U.S. Treasury yields dented the metal's appeal despite concerns over surging inflation. Spot gold was down 0.7% to $1,842.49 per ounce by 12:07 p.m. Eastern Time, 16:07 GMT, falling nearly 1% earlier in the session to $1,837.99, and was down 2.8% for the month in its biggest decline since last September. U.S. gold futures fell 0.6% to $1,845.80.
Copper prices slipped from their highest in more than 3 weeks on Tuesday, pressured by a firm dollar and worries about a potential recession sparked by interest rate hikes to fight inflation. Copper has recently been caught between bullish and bearish influences, and prices earlier advanced on investor hopes that China's lifting of lockdown restrictions would boost demand. 3-month copper on the London Metal Exchange had slumped 0.8% to $9,468.50 a ton by 1600 GMT, after earlier climbing to its highest since May 5 at $9,591.50. US COMEX copper slipped 0.1% to $4.30 a pound.
We will now look at the top news in the agricultural sector.
India is likely to see normal monsoon rains in 2022, the state-run weather office said on Tuesday, the 4th straight year of normal or above normal summer rains that spur farm and overall economic growth in Asia's 3rd biggest economy. A spell of good rains could lift farm and wider economic growth and keep a lid on inflation, which jumped to 8-year high in April and prompted the central bank to raise lending rates. India is likely to see rainfall at 103% of a long-term average this year, Mrityunjay Mohapatra, Director General of the state-run India Meteorological Department, IMD, told a news conference.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.